Welcome to Perspectives Live. Each week, we bring you timely insights, expert perspectives, and the trends shaping what's next in banking, credit unions, and fintechs. Today, we'll be hearing from John Burns, Managing Director for SRM Europe. Here's what you need to know this week. Welcome, John, to Perspectives Live. I know you're a very, very busy man, and I'm very grateful for your time. Tell me about what's going on with SRM Europe and some of the work that you're tackling right now.
It's a pleasure to be here. So, there's quite a bit going on in Europe at the moment. I guess at a holistic view, there's, like everywhere, there's a lot going on with agentic commerce at the moment. Embedded finance is an area that's getting a lot of attention. There's a lot of, ERP systems that are sort of embedding sort of like payment protocols and systems at the moment. So it's quite a lot going on. I tend to gravitate towards the payment acceptance side of the business. So I am involved in some of that embedded commerce activity. But I guess right now, what's sort of like on my plate and what am I busy with? I'm busy on a lot of sort of like transaction economics assignments. And that's really working with the payment acceptance, acquiring community to get a better handle on some of those scheme fees. Not to be unkind to the schemes, because that's certainly something that we don't want to do, but scheme fees have increased quite dramatically over the last decade. And with that increase and with new fees coming in because of different payment types and that, it's been really difficult for the software vendor community that provides merchant management software, together with acquirers, to keep up with the level of those changes. And in fact, in fairness, the schemes themselves have struggled to provide that level of settlement detail. So we've stepped into the breach of that, and we're at the moment working with a number of tier one acquirers across Europe. Some of those are enterprise businesses with businesses in the US, so it's very kind of like current. And we're just helping them get that level of detail that they need, particularly to respond to enterprise merchant queries. You can imagine the large digital players, marketplaces, they want a lot of detail and they've got a lot of analytical expertise themselves to analyze that. So that's taking up quite a bit of my time, but there's plenty going on in Europe at the moment.
Yeah, it's really fascinating that merchant acquire profitability work that you're doing, because it's not just regional, it is a global opportunity. And certainly, as you mentioned too, with the work again with agentic AI, these are massive volumes of data that needs to be processed, reconciled too. So how is that maybe either accelerated, kind of the opportunity, or at least made the opportunity with a clearer definition of like, how do we tackle this and make meaningful impact? Talk to us about how agentic AI has really kind of accelerated the opportunity there.
Agentic AI, I think that I'm seeing that more of, you've got an agent talking to agent, consumers having agents, merchants having agents. That's going to facilitate commerce. I guess what we're doing is, if we're using AI, we're using it to dig deeper into the data. When we talk about scheme fees, and look, I think there's two things, and I don't want to get too technical for the audience. If you're in the acquiring business, you've got two big buckets really of cost: interchange, regulated interchange, unregulated interchange, and your other big bucket is scheme fees. Now, regulated and unregulated interchange, if I'm really honest, and people will say, hey, we've got that solved. They publish the rates. It's more of a table exercise. Yes, there is some coding needed to manage that. But I think that on the whole, the industry manages that quite well, and the schemes have been quite transparent in publishing those tables. But that's not the case for sort of like the scheme fee side of the equation. Scheme fees, there's lots of them. It's very complicated. There's more sort of like scenarios in terms of how they apply scheme fees. And to be quite honest, when we're talking about volumes of data, we're talking about billions of transactions. And we're talking about daily transaction counts, which you've got to aggregate, up to a month in terms of the billing cycle to reconcile it with the scheme invoice. So huge amounts of data, lots of number crunching. And lots of sort of like, intelligence in the system to identify those scheme fees at transaction level. So we're kind of like doing billing line level per scheme fee, per merchant ID, per cardholder acceptor ID. It's millions of lines of data, and we tend to serve that up in a machine readable format so that, acquirers can digest that rather than some analyst trying to look at it on a screen. Of course, we've got dashboards and that to give the overviews, but people really want that line item detail. And that's what we're serving up at the moment. And there seems to be, I would say, quite a positive attitude towards that.
Yeah, that's fascinating work. So let's talk about faster payments. You're definitely the SME inside the walls of SRM when it comes, to payments, and we have some exceptional talent here at SRM. Talk to us about, the UK has been operating faster payments for nearly 2 decades, maybe even longer than that. What lessons can US financial institutions learn from the UK as it relates to real-time payment adoption? And how does that accelerate through FedNow, RTP?
So when you say what can the US learn, I think that the biggest thing I would say if I was the US is that learn from the lessons, put some framework in place so you've got the interoperability between the two systems. And maybe the payment service community will do that. So banks and credit unions won't have to do that work. I'm sure that there'll be integrators out there that put that interoperability together. But what the banks need to work on is a framework. And what was late coming to the market in the UK is we had all this fraud, and we had all this noise, and we had all these disgruntled consumers. And because we're talking to, account-to-account fraud, and if we want to say, card rails have been around a long time. They're mature. There's great sort of rules and regulations, and there's great protection for all the parties involved in the transaction. In account-to-account fraud, it's like, it's the receiving bank, it's the sending bank, and the poor consumer's in the middle. And if they've authorized that payment's gone immediately. You're not going to get it back. It's not like an ACH where the bank can go, okay, we'll request that payment back. Oh, it hasn't quite cleared. It's gone. So you definitely need, so when we talk about AI, I think that's a role for AI in terms of fraud management. I think there's a role to sort of work with big tech, with the marketplaces, with social media platforms. I mean, they've got to be part of it. We've got to better screen out the bad guys. And I think that we've not been massively successful at that. But I think that if that fraud bubble starts to happen in the US, I think probably the US regulator will have more clout than perhaps what we've had in, trying to regulate, US big tech is not easiest, but if the US is regulating US big tech, that may bear better fruit.
Yeah, you really got me thinking too when you talked about big tech as part of this equation, because so many of the social networks and technology companies too want to start acting like banks, or even applying for bank charters, or are embedding, having embedded finance too. And so they are naturally part of the ecosystem too. So how can we accelerate the use of technology and AI to mitigate and build these frameworks that are in real time for fraud mitigation, versus allowing a separate system for processing that just empowers them even more? So I think that that's a really interesting topic to continue to explore. So as we kind of wrap up, we've talked a lot about acquiring sides, scheme fees, fraud, certainly faster payments. There's a lot going on in the payments elements within the financial services industry. So as you think about the next 12 to 18 months, where do FIs really need to be paying attention to focus on moving their business forward in a way that's consumer-centric, that mitigates fraud but delivers a great customer experience? What are the areas that we need to be focused on as an FI to improve our bottom line? Like, where should we be focused, and what do we really need to be paying attention to in this really big conversation around payments?
One of the biggest inhibitors is, and we have open banking here, and I like it, but it's a horrible consumer experience. I look at cards and I look at wallets and I go, click to pay. This comes absolutely everywhere with me. And if I don't have that, I'm penniless. I've got a leather wallet. I think I've just got a driving license in that, and maybe some cash for the very, very rare occasion I need to use it. But I use this for public transport, underground. I put my airline tickets in it and put my hotel passes. It's everything to me. So I actually want to give wallets a bit of a boost here. And not just Apple and Google. There's Tap to Pay. Both the schemes have been active. again, I might get punched in the face for saying this, but probably too slow to react. They were enabling Apple and Google decades ago and focusing on other things, and they should have been absolutely saying, this is our territory. And we know, whilst it runs, look, and Apple and Google do run on card rails and go through the schemes. But because they've got the device, so I managed to get great critical mass and adoption. And I think that's worked really well. What I would really like to see, and when we talk about account to account, and I was like cruel enough to say that the open banking is a horrible consumer experience, is how do we get open banking into the wallet? And how do we get, because consumer doesn't care. Because I actually think that for a merchant, that might be a less expensive transaction.
Yeah. They don't care about the architecture or the infrastructure. They just care about the outcomes. Like, they just want to make it easy for them. Like, I want to do something, allow me to do it. I don't care about the system architecture, right? I don't care about the rails that we're on. I just want to be able to be secure and use my phone when I need to use it, right? Yeah.
Absolutely. And there are some success stories. I look at across Europe, and I probably look not too far away, but I look to the Netherlands, and they've got a very mature domestic payment system called Ideal. And for cross-border transactions, they've partnered obviously with the card schemes, mainly MasterCard. I'm not plugging MasterCard, but mainly MasterCard for that cross-border activity that's required, or that traveling purchase. But I think now with technology, with wallets, I think we are going to see a bit of a proliferation of domestic schemes. And in doing so, I'm choosing my words carefully here, just to try and sort of like keep those domestic transactions out of the payment schemes. But, that comes at a cost as well. That means that you've got to do your own reconciliation, your own exception processing, you're underwriting the risk, you're not part of the scheme. But I think that alternative payments and domestic payment schemes will probably see some of those popping up, because the technology is there now to do that certainly more easily than it was in the last decades. And I think, if you're asking what else, there is a lot going on in embedded payments, and particularly with ERP systems, probably connected to 75% of that enterprise market. Of course, rather than somebody making a payment somewhere else, to embed all of that, whether you're running SAP or whether you're running, something a little bit more fluid and agile, but Salesforce, HubSpot. I just think there's lots and lots of opportunity for that ERP community to do more.
Fascinating. Well, I always learn so much when I just spend time with you, John. It's always just a pleasure. Thank you so much for sharing your perspective with us today.